Students, welcome to accountancy class. I am NARSIMULU, commerce teacher. In this video, I will explain you CEC first year accountancy. In that, the procedure of recording accounting transaction in the books of journal by using golden principles of accounts. Right, students? You already know that the concept of dual aspect concept. So as per this concept, every business transaction will have two aspects. One is receiving benefit aspect, another is going benefit aspect. Receiving benefit aspect is called as debit aspect, and going out or giving concept aspect is called as credit aspect. And one more thing, you also know that there are three accounts. In accounting, there are three accounts, and each account have its own principle. So what are those three accounts? One is personal account, second one real account, third one nominal account. And here personal account principle is that receiver account should be debited, giver account should be credited. And come to real account, and real account principle, debit what comes in, credit what goes out. And third one, that is nominal account. Nominal account principle is that expenses, losses, cost should be debited, and incomes, revenues, gains should be credited. So these are the three accounts and their principles. These principles also called as golden principles of accounting. Now, using these golden principles of accounting, we are going to journalizing the business transaction in the book of journal. Just you have to observe and follow the steps that I will explain in this video. Students, in this video I am going to use only one account and its principle, that is real account and real account principle. So you students already know that all assets and cash comes under real account. Okay, and real account principle is that what comes in should be debited, what goes out should be credited. Right, using this formula, using this account, we are going to enter the business transaction in the journal, and you see the procedure how I am going to analyze the process and follow that. See here, one transaction is given January 1st 2018, purchased a computer for cash rupees 40,000. It is the business transaction. So we already know that as per dual entry concept, every business transaction will have two aspects. So it is a one business transaction. It must have two aspects. So we need to identify those two aspects. See here, students, if you observe the transaction, you will find two things. One is computer, another is cash. So we have to ask ourselves a question, that is there the name of a person in this business transaction? If you observe, no, there is no name of a person in this transaction. Okay, keep it aside. Second, you ask yourself one question, that is there any asset in the business transaction? If you observe this transaction, purchased a computer for cash. Yes, you know that all assets means here, you already know which can be used for a longer period of time in the business organization are called as assets. So here computer is an asset. Okay, it is one aspect you identified. Computer is an asset, you identified as a aspect, one asset. Okay, and come to second one. If you observe, there is one more aspect one more item, that is cash. It is also asset. Okay students, here you identified two aspects in this business transaction as per dual aspect concept. So after identifying two aspects in the business transaction, just you here you decide this assets comes under which type of account. So here asset comes under real account. So here you can go to write real account. Asset comes under real account. Assets related to real account. So here it is comes under real account. Cash also asset. This asset all assets comes under real account. So it is a real account. Next, here next step. First you can go to complete computer aspect concept. Okay. Then computer is an asset. Asset comes under real account. Real account has a principle. What is the principle you see? What comes in debit, what goes out should be credited. So as per that principle, if you observe this business transaction, purchase the computer for cash. When we purchase the computer, is the computer coming into the business or going out of the business? Yes, that is correct. Computer comes into the business because we are purchasing computer is coming into the business. So what comes in, that should be debited as per real account principle. So here it comes in. Okay, comes in. So whatever that comes into business, that should be debited. Here computer account debit. Here we should debit the computer account as per real account principle. Okay students, we completed first aspect and we decided the computer account. And come to next one, cash account. If you observe, cash also an asset. Asset comes under real account. Real account has a principle. What is the principle? What comes in debit, what goes out credit. So as per that principle, when we purchase the computer for cash, is cash coming into the business or is cash going out of the business? Yes, that is correct. Cash is going out of the business. So whatever goes from the business, that should be credited as per real account principle. So goes out, cash goes out, that should be credited. So then cash account should be credit. Okay, cash account should be credited. So debit account we found and credit account we found. Now after completion of this process, you can go to do all this process in your mind. For understanding point of view, I have explained one by one point steps here. So these steps you can go to think in your mind. So after finding the debit account as credit account, then you can go to write a journal entry in the journal. So before going to write the journal entry in the journal, you need to prepare the journal pro forma. So in the journal pro forma, there will be 5 columns. First column debit, second column particulars, third column LF number, that is ledger folio number, and fourth column debit amount, and fifth column credit amount. Okay students, like this we can go to prepare the journal pro forma. After preparing the journal pro forma, now you write the journal entry in the journal. So in the date column, first you can go to write 2018 January 1st. Okay students, here what is the debit account? First you observe in this process is debit account is computer account. So first you can go to write computer account debit. In the debit column, against this account, amount of rupees 40,000. Okay. Now credit account. Which is the credit account in this transaction? Yes, cash account is the credit account. Go to write to cash the credit column, amount you should go to write in the credit column against the cash account. Okay. So after writing the entry, you need to write a narration. So narration simply you can go to write as the transaction, or whatever the way you think you can go to write. Being computer purchased. Computer purchased. In this way you can go to write the narration for the journal entry. Okay students, in this way you have to write the entry in the journal. Let me explain you once again everything. So you will be given a transaction. What is the transaction you are given? On 1st January 2018, purchase a computer for cash rupees 40,000. This is the transaction. Okay students. So as per dual aspect concept, we need to find two aspects in this transaction. So whenever we try to find the aspects, we have to ask ourselves some questions like, is there the name of a person, or is there the name? So if there is no name, simply omit it. Come to next one. Ask yourself, is there the asset? Okay, if there is the asset, you can make it underline. And you will also ask some more questions like, is there an expenditure? Is there any income? So if they are in this given transaction, just make them underline. So here in this problem, in this transaction there is no name of a person or a name of an institution or other organization. At the same time, there is no expenditure and no income. So what are there? Only assets. So computer asset and cash asset. So make them underline. Okay. After that, write computer as an asset. Asset related to real account. Okay. Asset comes under real account. So real account principle. What is the real account principle? Real account principle is what comes in debit, or debit what comes in credit, what goes out. So when you apply the principle here, when you purchase the computer, is the computer coming into the business or going out of the business? Is computer coming into the business? So that should be debited as per the real account principle. Computer account debit. And come to cash. So cash also asset. So asset comes under real account. Real account principle says that debit what comes in, credit what goes out. So here when you purchase the computer, is cash coming into the business or going out of the business? Yes, going out of the business. Whatever that goes from the business, that should be credited as per the real account principle. So cash account should be credited. After completing all this process in your mind, write the journal entry. So after preparation of journal pro forma. So date, in the date column you can go to write year, then month, then date. And debit account first you can go to write debit account, that is computer account. So again in this account, in the debit column you can go to write amount, that is transaction amount is 40,000. And come to next one, second account is that credit account, that is the cash account. So cash account, again is this account, in the credit column you write 40,000 rupees in the credit column. So after writing this, you can go to write narration. What is the narration here? Being computer purchased. That's enough. Or you can go to write as being computer purchased for cash. That's your wish. Okay, so in this way, you can go to write the journal entry in the book of journal. I hope children you understood how to write the journal entry in the book of journal. Thank you for watching this video.